Welcome to online lectures by CA Studies. For more lectures online, please do visit castudies.lk.
So now we know what an organization is. Now we are going to see what are the different types of organization. Right? There are two different types of organizations when it comes to the motive of the organization. So that is profit making and the opposite, not for profit. Right? So the objective, as the name itself says, for a profit making company is, or profit making organization is, to increase the profit of the company, whereby they could increase the value of their shareholders or return on the investments. And for not-for-profit organization, they have different kind of objective. It could be to attending a need that is not addressed by the profit-making entities, or doing charity, or it could be providing infrastructure or anything. Right? So we will see a graph, or rather a chart, that has been given in the study pack, and we will discuss in detail what it means. Right? So this is profit oriented, and we have two objectives, which is primary goal and secondary goal. Right? So in a profit making organization which is aiming to make profit, the primary objective, as the name suggests, would be to maximize profit. Maximize profit. Right? And how they maximize the profit is through output of goods and services. And how the goods and services are produced? Using the resources. Right? Okay. Whereas in an organization which is aiming for not-for-profit, the primary objective would be to provision of goods and services. And services, and their secondary goal or objective will be to minimize the cost. So how they achieve it? By goods and services. And the same drill here, resources. Right? So this graph, if you look at it, it simply explains what is the primary objective and the secondary objective of an organization which is functioning to make profits and not for profit. So in this case, if we take this part, which is an organization aiming to make profit, the primary goal is maximizing profit, and the secondary goal is output of goods and resources. Whereas on the other hand, the provision of goods and services becomes the primary goal of a not-for-profit organization, and the secondary goal is not relating to profit. It is to minimize the cost involved in providing those goods and services. Okay? Because they don't want a profit. All what they want is minimize the cost as much as possible and provide good quality, or provide the services to their stakeholders or the parties who are consuming their goods and services at the lowest possible cost. So that is what the difference between a profit oriented organization and not for profit oriented organization, right? And the next classification of organization is, so this would be one way of classifying organization based on the motive, whether it's profit motive or not for profit motive. And the second type of classification of organization is based on their ownership. Based on the ownership. Here it's motive. So if you can, while we are discussing, I encourage you to take your own notes based on what you understood, because as I told you earlier, we won't be issuing any other study material except for the study pack, because that is the source of the exam. Okay, that is where, that is based on that only our exams has been structured. So we are not going to issue any other extra materials unless required, maybe for revisions, but it would be very much better if you can make your own notes in your own words based on what you understood here, right? So the second classification of organization is based on the ownership of the entity, right? Here it's mainly classified into two categories, whether it's public or private, right? So public owned entities are entities where there is a central authority or government owns the business or the organization. So it's mostly owned by government in general meaning, whereas private is owned by individuals. Right? Okay. So this is straightforward. It could be, there are different types of public owned entities. For example, public owned entities are, there are three categories. Okay. So one is statutory bodies. Examples of this could be courts, no, the Supreme Court, High Court, ministries, education ministry or whatever the ministry, right? So that is number one. And number two, I'll write and then explain. Government companies. The legal form is companies but is owned by government. Example, BMC, Buildings Material Corporation, BOC, Bank of Ceylon, Ceylon Electricity Board, Central Bank of Sri Lanka, and Petroleum Corporation, right? Examples of government companies. And then there is schools, right? So if you look at public owned entities, it will be mostly focused on providing services to the society or to the people of the country. So examples like we discussed here, as we have written here, the first type is statutory bodies. Example, courts or ministries. Because these are the areas where the private sector cannot be involved, because it has to be done by someone who is centralized or who doesn't have an influence over the other business operation. So it should be, or definitely should be, done by a central entity which is controlling or is in charge of the law and regulation of the country. So that is where government takes over. So government controls the courts because it has to maintain the legal framework of the country. And then ministries, to be, say for example, education ministry. So they are responsible for overseeing the educational function of the country. And when, say like example, transport ministry, so they have to take care of the transport related infrastructural facilities of the country, right? So that is where these ministries and courts are examples of statutory bodies. And the next type, or the second type of government or public owned organizations is government companies. So these are also in the same business as some private organization. For example, BOC, Bank of Ceylon, is doing the same operation as other commercial banks. Only difference is it is owned by the government and it is doing the same operation. And then Ceylon Electricity Board. Electricity Board is also catering to a requirement which the private sector is not addressed, or which the private sector is not allowed, or there are entry barriers limiting it from entering into the business. So the government is taking care of it. And Central Bank of Sri Lanka, again a regulatory body which should come under the government, right? And then we have schools, which falls under part of the educational system, right? So what are the key characteristics of a public organization, right, or an organization owned by government? What are the key characteristics? So number one is accountability to legislation. Accountability to legislation, that is accountable to the system or the rules and regulations of the country. And number two, how these are funded. So funding is done mainly by the main source. How government receive funds is taxes, right? And the other ways how government is funded, making charges, borrowings, right? This is one. Charges, borrowings. 4, it's only number 3, right? So charges is like when courts, for example, they charge penalties or fines, and which in turn help them or allow them to cover the expenses which is incurred by the organization, right? And borrowings, the loans or the support grants which are given by the other countries, or it could be other organizations such as the World Bank or etc., right? So how the public organizations are funded, right? And we'll talk about demand for services. And the next point is limited resources. I'll explain that. Resource. Right. So we say demand for these services which are provided by the government is practically limitless. The reason is because most of them might be free services which the government is giving. For example, the educational system, free education, there's a lot of demand. Free health services, there's a huge demand. And even infrastructure, roads, lights and everything. So no matter how much effort or how much the government spends, there will be always more demand, because people always expect more from the government or from the public owned organizations, right? And whereas on the other hand, there is an unlimited demand and the resources are very limited, because as I said in the earlier point, how the government or public organizations are funded is through taxes, charges and borrowings, right? So the resources that a government gets, it's very limited. You might have heard or seen how the budgets work, the government budgets. You always there or always or most of the time there will be a budget deficit. The reason is there is only a limited number of resources and there is unlimited demand for those services, because that is how the people's expectations are towards the government. There is limited resources and there is unlimited demand. That is common everywhere in the world, right? So that is what common characteristics. So I'd say these are characteristics. Okay, so before moving on to private, we will cover everything about organizations owned by public, right? And then now we know the characteristic. Then we will move on to what are the advantages and what are the limitations or disadvantages of public owned businesses. Okay, so we will start with the benefits, and then on the other hand we'll talk about limitations. So what are the benefits of an public owned entity or a government owned entity? So what do you say? Right? We generally assume it has fairness, that is access to all the people. Okay. So when I say access to resources, what I meant is, for example, take our health system, right? Because it is given free of charge to everyone, everyone has access to those services. An educational system, it is also given free of charge, and everyone or every individual of the country have access to those resources. Whereas in a private owned entity or private health services, we take for example, the access to people is limited, because to access those services they need money. Not everyone will have that much of money. Because of that, they will have limited access to those resources. Whereas in this case, where it is owned by the government and because it is given free of charge, there is access to all the people, and that is what is called fairness. And the second point, filling gaps left by the private sector. Filling gaps left by private sector, right? So private sector organizations, as I discussed earlier, most of the private sector organizations, not all, but most of the private sector organizations' prime objective would be to make profits. Okay, so they won't entirely care about providing infrastructure services to the society. Say for example, building roads or street lights. The government or the private sector organizations won't be interested in providing those services as much as the government, because private sector organizations most of the time focus on return on their investments, whereas they won't have much of return financially on those kind of activities. So those are the gaps which are left by the private organization, to which the government attends to, filling gaps left by the private organization. So here it's mostly services related to infrastructure of the country, right? Infrastructure. And the next feature is public interest. These services and these government-owned entities in theory are operating for the public interest, because their prime objective is not making profit. Their objective is to give something into the public or to attend to a need that is there in the society which has to be filled by the government, right? And then cheaper finance. As said in the study pack, right? Because government will be lesser borrowing cost because government has backed up funds. So as we generally say, government related securities have lesser chances of going to bankrupt. So we assume that there is a cheaper finance cost, right? So what could be the limitations in an organization, in a government owned entity or a public organization? Based on your knowledge, what could be the limitations, or I would rather say disadvantages in a government owned entities compared to private owned entities, right? First one is responsibility, right? Okay, everyone is with me, right? So responsibility is where here what happens is the management, or say for an organization, is using the funds of the public which is collected from either tax or fines or borrowings from the country. So when they are using that fund, they have to be accountable or responsible for how they use the money, right? But generally in most of the cases that accountability won't be there, and inefficiencies might be ignored, right? Because what happens here is the people who are facing the losses is not these organizations. The people who are ultimately facing the loss, the party who is ultimately facing the loss because of the inefficiencies in the organization is the taxpayers, people who are contributing to the government, or people who are funding the government organization, but that is often ignored. And finally the taxpayers has to bear the cost, whereas the inefficiencies continues to go in the organization. And the next part is interfering by politicians. And I'll write the next point and explain. Cost, right? Interference by politicians. So what is meant by that point is, for example, we'll take an environment protection authority, right? So that, or any other authority in that case, right? That particular authority is specialized or has a group of people who are specialized in that industry, right? Be it, could be even say petroleum board, for example. So it will have a set of people, or the organization will have a set of people who have studied or have expertise in that particular area, but they will have some kind of interference from the politicians on their decision making, right? So politicians who may not be experts in the area where the organization is specialized or has a good level of knowledge might have to go ahead with the politicians' decisions, because the organization has some influence by the politicians, right? So this in turn again causes inefficiencies in the organization. So what happens when inefficiencies are there in the organization? The cost goes up, and who pays for it? The taxpayers again, right? So that is again a limitations of a public owned entity, right? Interference by politicians which cause or lead to inefficient decision making, right? The next point is cost. So what I mean here by cost is, public always want high quality goods at the lower cost. So what is expected is the quality has to be high quality and lower cost. Right? Conflicting, right? So if you want to give or produce a good at a very high quality, obviously the cost will have to go up. Higher the cost, higher the quality, as we say. But what the people of the country expect from any government is they want high quality goods at lowest possible cost. So no matter how much the quality goes up, they want it at lower cost. They want the quality as well as the cost. So if the government tries to increase the quality, obviously the cost will also go up. But the public won't be accepting the increase in the cost, right? So that is also a conflict of interest when it comes to limitation of a public entity, right? So this is all that is there to learn about the organizations which are owned by public, right? So that part is fully covered. I'll again summarize everything that we discussed before moving on to organizations which are owned by private, right? So government organizations or public organizations, the key characteristics are the organizations owned by the government or a central authority, right? So that is the definition of an organization. That is the definition of a public organization. The key characteristics, it's owned by government, right? So examples or types of government organization: statutory bodies, it could be courts or ministries, etc. Government companies like Building Material Corporation, BOC, Bank of Ceylon, Central Electricity Board, and Central Bank of Sri Lanka, petroleum corporations, and so on. And then it could be schools, the government schools. And the key characteristics of a public organization is accountable to the legislation or the system of the country. And then how these kind of organizations are funded by taxes, charges, and borrowings. And demand for services is practically limitless and limited resources by the government. And the benefits of this organization is fairness, that is access to the services to everyone, and it fills the gaps that is left by the private sector. And public interest, the purpose would be public interest and cheaper finance. And the limitations of the organizations, public organization, would be responsibility won't be taken, that is inefficiencies would be ignored, which in turn affects the taxpayers, because these organizations are funded by the taxpayers. And the next one is interference by politicians. So interference by politicians can lead to inefficient decisions, as I told earlier. And the cost, people always want these services at lowest possible cost and highest possible quality. So I advise you, if you could just pause the video while you are watching, and if you can write this down, because this is all what you need to know about public owned organizations in the syllabus. So please make your own notes, and if you could right now make your own notes, it will be better before we move on to the next area, right?
Thank you for watching the video. Stay tuned with castudies.lk for more lectures online.